Hi, I am Anna. I come from www.ntvforex.com. US stock markets take double hit. http ntvforex.com news ID D82202. 7/14/2026 41:04 am. Rates. Risk sentiment on stock markets remains the dominant driver for other markets, especially in absence of any other echo or event news. A clear blue sky paved the way for additional equity gains, both in Europe and at the start of US dealings. Core bonds ceded ground via the traditional risk paradigm. U.S. Secretary of State Pompeo's warning against China that claims to offshore resources across most of the South China Sea are completely unlawful sent a first shiver through U.S. stock markets. The rosy picture was later completely shattered by California Governor Newsom's decision to roll back the state's reopening and calling an immediate stop to indoor activities. Main U.S. indices closed flat, Dow to 2% lower, Nasdaq. The main move occurred after the official European close, explaining the significant intraday outperformance of U.S. Treasuries when looking at the daily scorecards. The U.S. yield curve bull flattened with yields declining by 0.2 bps 2-year to 2.9 bps 30-year. The German yield curve bear steepened with yields rising by 3 bps 2-year to 5.3 bps 30-year. Apart from risk sentiment, technical factors remained at play with the German 10-year yield last Friday bouncing off 0.48% support. Peripheral yield spreads vs Germany narrowed by up to 4 bps. Most Asian stock markets trade with losses this morning. China underperforms 2%. The German Bund made a catch-up move in after-hour dealings, but is just like the US note future off best levels. Today's Echo calendar contains US NFIB small business optimism, US CPI inflation and German ZEW investor sentiment. We don't expect them to be detrimental for trading ahead of bigger US numbers and EMU events later this week. US Echo data include July business surveys, Empire Manufacturing, Philadelphia Fed and June hard data, industrial production and retail sales. European focus turns to the ECB meeting and EU summit at the end of the week. The ECB is unlikely to alter its policy stance again, but will continue to strike a cautious tone on the economic recovery while standing ready to add stimulus if needed to counter downside risks. European leaders will try to broker a deal on the recovery fund, with the Frugal Four still objecting the proposed structure too large amount of grants. Risk sentiment will thus remain the needle in the market compass, with yesterday's developments short-term supportive for core bonds. Technically, the US 10-year yield is drifting to the lower end of the 0.54%–0.78% sideways trading range. The Fed's implicit yield curve control remains at work, open-ended, unlimited QE. The German 10-year yield bounced off first support just above 0.50%. Download the full Sunrise Market Commentary. Subscribe our channel to receive the news as soon as possible. Thank you for watching.